Hi, I'm Cody from Wall Street Breakdown. We've been covering a whole lot of stuff in regards to the stock market and basically just getting our training wheels taken off in regards to investing. Now, one of the key metrics you're going to see used in all of your investing life for any company out there is going to be the price to earnings metric. Very simple calculation. That is the current price divided by the previous 12 months. Yes, the previous 12 months EPS. That metric, the trailing price to earnings or the classic price to earnings metric, is not what we are talking about here today. Today, we're talking about a forward price to earnings. The future, boys. That's what we're looking forward to, is what's going to happen. Get out of my screen paper. In the future. That's what we want to know, because who cares what happened in the past, right? So what? A company went on a run. I wasn't invested in it. I want to know if they're going to do well tomorrow, and tomorrow is what we're going to look at. The price to earnings calculation does remain the same when we're talking about forward PE. Now, I want to let you know, when you're looking for forward PE, you're probably going to have to go out and specifically search for forward price to earnings. A lot of places that have metrics for companies are going to be using the trailing price to earnings number, also known as price to earnings. Why? Why? Because the EPS number from the previous 12 months and trailing price to earnings is there. They already understand it. See, with forward price to earnings, the future, oh yeah, the future has a bunch of analysts that are going to make assumptions as to what's going to happen in the next 12 months. Or we're going to take a company's guidance or a combination of all of that put together, and we are going to assume EPS for the next 12 months or the next 4 quarters. And that is how we are going to get our forward price to earnings number. Again, calculation the exact same way. The current price of the shares over the forward 12 months EPS, guidance, estimates, whatever it ends up being. And if you've got a 50 on top divided by 2 as your EPS number, let's say 50 cents a quarter for the next 4 quarters, we've got $50 a share. So $50 a share divided by an EPS for the next 12 months of 2 gives us a forward price to earnings of 25. Now, why is a forward price to earnings something that's relevant? Because isn't that just kind of an estimate? It is just an estimate. You're right. But you can always go back in time. There's the past again, right? Go back in time to find out how close you'll be predicting the actual future. How do you do that? Let's take a walk back down memory lane and see what forward price to earnings for said company were going to be in the previous years. Let's go take a look at how well the analysts or the guidance did at predicting that EPS number. That will at least give you a bit of confidence going into the next 12 months, knowing that analysts or said company have done a very good job, or potentially a very erratic job, of predicting their forward price to earnings by over predicting or under predicting EPS guidance. But the forward price to earnings is what we want. Ultimately, as an investor, I don't care about the past. The past doesn't matter to me at all. Nothing in the past is going to affect today, is it? You're not going to find where no, nothing in the past is going to affect today. What's going to happen is we want to know where the things from the past that are already working into the future that all the analysts have predicted, where they're all going to pan out. We want to know how this is all, going to shape itself. So the forward price to earnings becomes that PE number that we're interested in, much more, I think, than the trailing price to earnings, because a trailing price to earnings could be 15. You could take a look at a company and be like, trailing price to earnings of 15 in a sector where the average is 19, man, this company could really be a bargain. Then you take a look at their forward price to earnings and something's happened inside their company that's totally going to stifle EPS going forward, and they could have a forward price to earnings of 50 in an industry where the average was 19. So that 15 number from the past, that isn't helping me at all. It gives me an idea of where we stand, but since the EPS number doesn't update itself, we could be 2.5 months removed from an EPS number in a new quarter and still using, the past. I want analysts that are following a company stringently, that are giving me EPS guidance, analytical breakdowns of where they think this company's going. Their whole careers are based on breaking down individual companies. Those are the guys that I want to listen to, especially if consistently with this company in the past, they've done a good job of predicting where that EPS is going to go. Then that forward price to earnings lets me know if today I'm looking at a bargain, or if I might be looking at something that, while the trailing PE seems like a decent number, the forward PE says, don't invest. Don't invest in this. So there you have it. That is forward price to earnings. Going to help let you know a little bit about what's going to go on in the future. We've already done a video on trailing price to earnings, and this is price to earnings. So if you see trailing price to earnings, or PE ratio, a lot of the times, that is all going to be encompassed in one thing. And then if you see forward price to earnings or forward PE, that is going to be a totally separate number. Sometimes these numbers, especially the trailing price to earnings, is going to fluctuate as the share price changes. The EPS number is not going to change. So you're going to see intraday changes in a trailing PE number. With the forward price to earnings, you are going to see potential discrepancies in what the estimates are. So check a couple of different sources: Bloomberg, Finviz, Yahoo Finance, Google. There's enough information and resources out there for you to be able to break this down. Forward price to earnings, going to be helping you predict the future of a company. Trailing price to earnings, telling you about the past. But price to earnings, one of the most used metrics on Wall Street, something you're going to want to have in your arsenal when you go out there trying to predict stocks using fundamental analysis. I'm Cody from Wall Street Breakdown. You guys have yourselves an outstanding rest of the day.